we will see a 15-to-1 ratio of silver to gold, which itself proves that silver is still money, and the demonetization of silver is just a myth. How do we know that? Because in times of monetary panic, the ratio always goes back to 15-to-1. It's happened 3 times. You're going to see that again, and that means that the dollar no longer functions as a gold derivative at all, and people have to return to silver as money. It is going to happen. It is going to be the ultimate signal that the end game is here, and that is when you have to use silver to buy stuff because the economy is starving for money, and without money, there can be no division of labor. Over the years, the US dollar has experienced various shifts in its value and standard. Initially, it was defined under a bimetallic standard linking its value to either silver or gold. However, the Gold Standard Act of 1900 exclusively pegged the dollar to gold. This arrangement was altered in 1934 and removed in 1971, signifying a significant change in US monetary policy. Renowned analyst Rafi Farber delves into the evolution of monetary systems, notably highlighting the pivotal transition from a bimetallic standard, where the dollar's value was tied to gold and silver, to a gold-only standard in 1873. This shift in the monetary structure led to a substantial redistribution of purchasing power from silver to gold. The adoption of a bimetallic standard in 1792 stemmed from silver's greater abundance relative to gold. While the initially adopted silver to gold parity ratio of 15:1 matched the market ratio, silver's value gradually declined after 1793, displacing gold from circulation. Rafi views this reversion as emphasizing silver's enduring monetary value. He anticipates a return to the 15:1 ratio, foreseeing it as heralding the current monetary system's downfall and a resurgence of silver as a recognized currency. Additionally, he predicts an impending endgame, a moment when the current monetary system will reach its breaking point. This collapse will likely instigate substantial changes, potentially restructuring societal norms and structures. Rafi believes that a balanced monetary system where silver and gold hold significant roles could help reestablish humanity's relationship with the planet. This shift presents a potential avenue to address the multitude of societal challenges prevalent worldwide. We will present clips from Rafi Farber. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video. The first step in destroying or monopolizing a monetary system by a government is not to confiscate gold, but to demonetize silver. The dollar originally was a derivative of both gold and silver. It was a bimetallic standard, and there are problems with that because then you have to establish a fixed ratio between gold and silver, which never holds 100 phi because supply and demand are always changing. But what was that monetary ratio? That was 15:1. And once the dollar changed from a silver and gold dollar to a specifically gold dollar, that means all of the purchasing power that existed in silver then moved all to gold. And this happened in 1873. It was essentially a wealth transfer, as we see all the time with bailouts in the Federal Reserve. The move to a gold standard from a bimetallic standard was itself a wealth transfer to the wealthy because the middle class owned silver and the rich owned gold. And by making the dollar only deliverable and convertible into gold and not silver, the purchasing power of silver collapsed into merchandise and all the monetary purchasing power went into gold. Once you have that, then it's much easier to confiscate gold because you can't confiscate all the silver in an economy. It is impossible because silver is everywhere, but it's much easier to confiscate gold and control the monetary system that way. So as much as we like to talk about a gold standard, and we want to go back to a gold standard, what we really want to do is go back to a silver standard and a gold standard as separate monies that compete on the free market. And that is how a monetary system should be structured. The other question is related to this. I get this all the time. When do we know the end game is here? And there are going to be a lot of different signals, like panic in the streets and people eating each other, but probably not the last one. But what we will see is a 15-to-1 ratio of silver to gold, which itself proves that silver is still money and the demonetization of silver is just a myth. How do we know that? Because in times of monetary panic, the ratio always goes back to 15-to-1. It's happened 3 times. In 1919, after World War I inflation, in 1968 at the fall of the London gold pool, and in 1980 during the dollar panic of 1980, which almost killed the dollar entirely. At each of these panic points, silver to gold, gold to silver actually goes to 15-to-1. And we're going to see that again. And that means that the dollar no longer functions as a gold derivative at all, and people have to return to silver as money. It is going to happen. It is going to be the ultimate signal that the end game is here. And that is when you have to use your silver to buy stuff because the economy is starving for money. And without money, there can be no division of labor. The end game is coming. It's probably not going to be as bad as your worst nightmare, but it's going to be pretty rough. I do believe it's coming this year. That's just my own personal thoughts. You can have different calculations, and I am a true believer in this sense that after it does happen, and silver returns to being money, even if for a brief period, which will mean that the monetary system has collapsed, I don't think I'll be doing this anymore because we will be in a new world. So I am a true believer in that sense. And in order to get through this period until it actually happens, there has to be a switch in our heads from dread of the end game to acceptance and actually rooting for it. Not for any of the negative consequences of it, but to get this over with and to get this over with and to get humanity back in balance again, because we are way out of line as a species on this planet for many different reasons. We can see society collapsing everywhere. In the West, in the South, in the North, over here, pretty much all over the world. Things are intolerable, but you know what fixes it. Silver fixes it. And a true balance money will bring humanity back into true balance with our planet. On Friday, the Federal Reserve Bank of New York disclosed that it had accepted $1.18 trillion at its overnight reverse repo facility, witnessing a surge in inflows to the central bank's liquidity facility on the year's final trading day. This spike in Friday's inflows was anticipated and notably exceeded the $829.06 billion recorded on Thursday, marking the first inflows surpassing $1 trillion since November 13th. The Fed's reverse repo facility aims to establish a foundation under short-term interest rates, which is a pivotal tool in the Federal Reserve's endeavors to steer the economy toward fulfilling its employment and inflation objectives. Over recent years, substantial inflows have characterized the facility, largely due to the Federal Reserve's robust stimulus measures. The facility peaked at a record $2.6 trillion on December 30, 2022. Anticipating a comparable trend for the current year, Rafi foresees a surge in reverse repos leading up to the year-end, followed by a notable decline in January. Although this pattern may be smaller this time, it mirrors trends observed in previous years. He predicts that this liquidity surge will likely diminish, signaling a potential scarcity in the monetary system in the coming months. We are headed into the year-end turn into 2024, and when there is a year-end turn, there are always some rumblings in the monetary plumbing. This, once again, is the reverse repos. We are down to, I think, $829 billion. We're up from 68, a low of $683 billion last week. During year-end turns, reverse repos tend to spike higher as banks settle their books for the year. It happened here in 2022. I put this box here and we were up $326 billion in the last week of the year, from here to this peak over here. And then in the first week of January, we fell $412 billion. It happened in 2020, 3 also, in December to December 20, 2 to December 22 to January, all-time high in the reverse repos, over $500 billion. And then we fell $542 2 weeks later. The same thing is happening now on a much smaller scale in terms of how much money is flowing into the reverse repos. And we're going to see the effect of that in a second on other plumbing markets. We're up. I think now it's like 150 billion because this is from yesterday. This is from December 27th, and the chart just updated to December 28th, but basically the same thing. Let's say 150 billion. We're going to go up again tomorrow into the year, end turn, and in January these reverse repos, this number is going to collapse to what number? I don't know exactly, maybe $500 billion. We're at 800. What did I say? 830 billion. Something like that. We're going to collapse probably to somewhere in the high 500 billions, maybe even lower. That's what typically happens. And from there, the rest of the monetary spare tank is going to run out in January, February. Somewhere around. There, it seems. And if all this liquidity is pouring into the reverse repos again now, where is it coming from? The repo rate has spiked 8 basis points since December 21st. This always happens going into the year end turn, and volume is also jumping up again, $1.72 trillion. If we go to this chart, we see here, this is the repo rate. It spiked up on November 30th at the month end, here showing some stress, and it's spiking up again here at the year end turn. It's going to spike again tomorrow. Why is this happening? Because money is being taken out of the repo market and being put into the reverse repo facility. Those dollars that were in the repo market a few days ago are no longer there because they're being pulled into reverse repo, probably for regulatory reasons, and this is causing a spike in the overnight interest rate. This is basically what happened in the repo apocalypse, just on a smaller scale. But we don't know what's going to happen tomorrow, as the maximum amount of money that can be put in the reverse repos are going to be stashed there for regulatory reasons. And this market is going to be a little bit starved for cash. And this market is going to be a little bit starved for cash. And the repo rate, the SOFR rate, is going to spike. And that is going to mess up the basis trades that were made, that are continually made on the 2-year Treasury. Now, silver prices remain steady despite global tensions and anticipated interest rate cuts, showing cautious optimism. Analysts predict significant changes in global monetary systems due to environmental, conflict, demographic, and economic factors. The potential resurgence of silver, alongside gold, hints at a pivotal transformation toward a more balanced, sustainable future. What's your outlook for silver prices amidst current global uncertainties and potential shifts in monetary systems? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.